Hi, welcome back. Mark Rogerson here in this series of SMSF Basics. Today we're going to look at how does an SMSF work, which is also a self-managed superannuation fund. So an SMSF is a legal tax structure. It's regulated by the ATO and it needs to have its own tax file number and ABN, which would have been applied for and granted when it was established, and sometimes, if applicable, can be registered for GST. So an SMSF is a taxpayer in its own right, and it also has the requirement to be audited each year. So it lodges a tax return, it pays tax if applicable, and it needs to be audited each year. As stated, it's a legal tax structure, so the SMSF is actually a trust. So for those that have had a family or discretionary trust before, it's kind of similar to that. So you've got a trust deed, which is the book of rules for the fund, and also a trustee, which makes decisions for and on behalf of the SMSF trust. A trustee can be individuals, you need to have a minimum of 2, or it can be a trustee company. And in both instances, the members need to either be the individual trustees, or if a trustee company is in place, there are then directors of that trustee company. And a little side note, having a trustee company as opposed to individual trustees is always the preferred method in this, when having an SMSF. So in its basic form, an SMSF will have its own bank account, which is separate from a member's bank account or any member's assets. It's completely segregated from your personal assets. And that bank account holds the superannuation money of the members of the fund. In its more advanced form, the SMSF will have many investments, most commonly in Australia, covering Australian shares, term deposits, and cash holdings, and also property. So the trustees of the SMSF make decisions on behalf of the members. So that can be from what investment decisions to make, to who's going to be the auditor of the fund, to should the super fund hold life insurance for a particular member, etc. So there's lots of decisions and responsibilities that the trustees of the SMSF have, who are also the members of the SMSF. Hope that's not too confusing. As stated, an SMSF can hold life and other types of insurances for the members. An SMSF can receive your employer contributions much the same as an industry or retail fund does. So the employer contributions effectively just are paid directly into the bank account of the SMSF. Another side note, effectively, the SMSF bank account, why it may be pooled, the accounting software is quite sophisticated. So if there's 1, 2, 3 or 4 members, all the dealings that are for the members are either credited or debited to that member's account. So if you think of an SMSF as a mini version of an industry or retail fund, it operates much the same way. The assets and the cash, etc., are sort of pooled in the SMSF, and then each individual member has their own account. So it's actually kept quite separate. An SMSF needs to have an investment strategy, which is a fluid document that considers a member's investment objectives, retirement goals, and I guess while considering the member's age, risk profile, and financial situation. So an investment strategy also needs to consider the diversification of the SMSF investments to make sure you're reducing risk. It needs to consider liquidity, which especially if there's members in pension mode in the fund, so that pensions can be paid. It needs to consider risk of investments, etc., to make sure that the assets are being held and invested in can be realised and meet the fund's cash flow requirements. And it needs to consider insurance, whether insurance is appropriate for each member, and that's a member by member test. So hopefully that's been useful in how does an SMSF work, and I guess to cap it off, it really operates like a mini retail or industry fund, just with only up to 4 members. So for more information, please contact us or look out for more videos in this series. Thank you.